everyone. It's Jessica McKnight from True Commerce is doing our webinar today on ASC606 ARM implementation. So go ahead, Jessica, take over.
Okay. Hi, everyone. My name's Jessica McKnight. I work for a company called True Commerce. We're north of Pittsburgh in Cranberry, and I'm the NetSuite Business System Analyst. I spent a majority of my career in public accounting and in business industry accounting. Recently, the last 2 years, I've been with our MIS team, Management Information Systems team, working as a bridge between our department's financial or a business need and requirements from the system and working with our developers to make the magic happen. So 606 was right in my wheelhouse. So I was able to help a lot with this ARM implementation. Now, I did this presentation back in the spring when we were real new into the new module from NetSuite. So it's the same presentation, might have a little bit of a different twist on it being, further down the road into it. But this was more of how our implementation happened. So I'll get started. Let's see if it will work. There we go. So for us, this was more of kind of to give you a heads up on how the timeline went for us in implementing the advanced revenue module of NetSuite. Now for industry or non-public industry, I think the standard, you have to be ready to report for the audit year ending this year. So your timeline is going to be a lot shorter than this if you haven't implemented yet. However, we started our process back in July 2018. We went live pretty much in January and had some kind of cleanup, and it's continual. I'll tell you to this, to now we're still making tweaks and finding things we want to change up. Not significant ones, just things that help enhance the current process. So July, we met with the auditors. We had to get them very involved to redefine how the new revenue policy was going to impact our current policy, and it did have a big impact for us. We were probably kind of on the line of how we recognized revenue appropriately. I think it was one of the main discussion points every audit with between our finance team and the auditors. In October and November, we worked with NetSuite. We did a contract with the NetSuite professional services team to help us implement. In December, we started implementing. So by January 7th, we had enabled ARM into our system. Again, once you turn it on, there's no turn off switch. So it was kind of if you're ready to go, you push go and there's no looking back. The week later, we started subscription billing, ARM with our subscription billing. Now this is a custom module that our guys have created for our system to bill subscriptions for us. The 21st, another week later, we brought our European group onto subscriptions and started to update them as well. And by the 31st of January, we had to be ready to bill our monthly network customers, which is about over 5,000 customers, bringing in over $2.5 million, and have it ready to go. So it was a big work month and a quick process. February, we were working out the kinks, cleaning up some of the records and transition, and dealing with figuring out, now that it's all in there, how do we report and use it? So that was, how our timeline worked. A little bit about 606, the revenue changes. For True Commerce, we always know we have the contract. We had a contract with the customer. We gave them a sale. The second step was a big change for us, and that was to identify the performance obligation of the contract. Prior, we were always based on delivery. So for electronic software, that was a nice, quick little, we delivered our the software. It's ready to recognize. Now, we did pair it with our implementation services. So we had a little bit of a shift on, really what we were doing back in 605 versus what needed to be done in 606. Determining the transaction price and the allocation of the transaction price. Those weren't big features for us. We really are simplistic in the sense of we do have a pricing sheet. We stick to it based on a customer. I mean, there might be different price levels based on what they own, but there is a price sheet. We do give discounts, so there is some allocation of a discount, but other than that, it's pretty straightforward. We don't have a lot of fair value adjustments. And then again, recognizing the revenue when you satisfy the performance obligation, that was a change for us. Some of the key things, you know, like I mentioned before, we were recognizing our revenue up front upon delivery. So what we had determined, we did look at leaders of our industry to determine what would be, you know, how were they doing it? Because, you know, we have competitors that are out there, public markets, that we can read their financials, see what they're doing, how they're recognizing, how they implemented it. For us, it was going to be amortizing it over the life of a customer. And then that was, you know, working with the auditor to determine what really was the life of a customer. All right, so the next feature was the introduction of ARM. So we had been using the NetSuite revenue commitment and the revenue schedules that they had prior to that. Again, those were built off of sales orders initially, and so they were linked to the transaction that way. With NetSuite's ARM module, this just gave more functionality and more flexibility with those schedules. No longer were they tied directly to a sales order or a transaction. They are now their own object, their own, what NetSuite will look at as a transaction, so that it can run in line with it. You were able to, one of the things we talked about for our implementation was, what do we do with the legacy revenue commitments? And what we ended up doing is we let them run out. So we could either change everything into ARM, but NetSuite also was kept that feature. Now they're not going to support it any longer, but we were able to bleed them out, and we're continuing to bleed out those revenue commitments on our orders. The biggest win for True Commerce was better reporting. So deferred revenue waterfall report, that's become a big, our main report for us. Prior, we had very little visibility, especially in our subscriptions, to see we sold this revenue, it's committed for a year or 3 years, but we don't have a good way other than through Excel to see what that looks like. So in 3 years, how much revenue are we really looking at that we've contracted to and can guarantee that will be coming in. So that was a big win for us. Contract cost amortization, so that's a piece of the ARM module. We do not use it. A lot of that is to amortize out costs associated with that revenue, things like commissions. We keep that. The value wasn't there for us to really implement and use it to that degree or that granularity. So our finance team continues to do that outside of NetSuite. We calculate our commissions on Excel, we post the journal entry, and then we do a month-end adjustment. I say we, it's them. I don't get to do any of that stuff anymore. But next, wanted to talk through just some of the challenges that we faced when we implemented ARM. One of the main things we had, just the starting point, was the item configuration. So the revenue is all tied to how an item is sold and how it's set up with these, whether it's the when it's going to create a revenue recognition and what that revenue recognition rule is. We have, as a company, we have evolved. We have had mergers, we've had acquisitions, we've had divestitures. So we've had a lot of pulling in other companies' information, their data, their items. So this really gave us an ability to look at the whole company and get us in line again, and get some updating and cleansing of our items. So we inactivated a whole bunch of items, especially from our divestiture, that were just sitting in there, looking through items, and having each representative from each finance group really look at and decide what needed updated or what could go. Discount items, this was a big one for us. We had originally had these as posting items on the financial statements. For ARM to work with the allocations your discount items have to be a non-posting transaction. That's just a quick little checkbox on the discount item in that suite when you set it up, and it now allocates into the price. So instead of seeing it as its own line item on the financial statements as discounts, sales discounts netting out of, you know, the top revenue or gross revenue, it now reports by, you know, revenue stream, whether that's, you know, software revenue or network revenue. It shows the net amount with that discount. It's just a cleaner way for them, as well as gives us an appropriate view of what we really sold that item for. The next piece were our revenue recognition and amortization setups. This allowed us on the item to clean up, you know, where the deferred revenue was going. We found that there were a lot that were in the incorrect buckets. The other thing with ARM that was new for us was just everything was going to go through deferred revenue. And we do have a few, especially those month-end invoices, where that just is going to create a lot of noise for 5,000 invoices. Those items, we ended up using the direct revenue posting, which is another checkbox. As you can see on this screen here, I'm not sure if you can see my printer, but it's right under the create revenue plans on. And that enables you to go directly to the revenue account. You don't have to go through deferred revenue and make any stops on the way. However, the thing we did find was that you cannot have an item, you cannot have two different items on a sale that have different revenue posting, one going through deferred and one going directly to revenue. So it's an all or nothing on your invoice or sales order, whatever the leading record is that takes the revenue into account, or creates this revenue arrangement transaction. That we did decide for our network, most all of that is recognized up as posted or as created on the transaction date. We do a journal entry for that to take we have an access fee and a usage fee. The access fee is for the month coming up. So we do just one big journal entry for that instead of having over probably 11 to 12,000 lines go through deferred revenue at the end of the month only to catch the access fee. So that was a big decision point for us, and helps to kind of keep that account cleaner than because it gets messy on its own. If you work in finance, you would understand that for sure. Another piece, creating revenue plans on, there was two different ways you can create them on pretty much the sales order and return authorizations being approved, or on the invoice or credit memos. So a majority of ours are based on sales orders or return auths. The other place you can do it on is they would change this create revenue plans to be on billing, which would be once an invoice is actually created from that sales order, or when the invoice is created standalone. Now, if you do have this on revenue arrangement creation and you skip the sales order process and you go right to an invoice, it will create it on the invoice. It knows, like, since it's not attached to a sales order, that it needs a revenue arrangement to be added. There are ability to have two different, rules. You can have your revenue recognition rule and a forecast rule. Ours are typically the same. I should say typically, they always are the same for us, but there is the ability to change how you're reporting for the forecast if you want. Real quick on the rules, this was one of the items that we had some kind of play back and forth on. We found that we really like the ability to be able to set when it's going to start recognizing and when it's going to end. You do have some ability in these rules to set up a period offset to always make it, recognize a certain month off or behind, and that, or really off, I guess. And then the term in months, we could preset that. So we do have a lot of our revenue is over 24 months. The issue we found with that is when whether we create a return on that item or credit on that item, a lot of times we're taking that revenue over a shorter time period to ante it up with what's being recognized out, if that hasn't fully recognized. And this was inhibiting that. So we took our rules off of having a preset term and a preset offset to really just being based on when we put the date in our on the item to start and end, so that it will just straight line over those two periods. That gave us a lot more flexibility, especially with returns. The next piece was challenges in our billing and revenue process. So I talked a lot about, not a lot, but I mentioned our subscription billing. Prior to ARM, we had very little visibility into that waterfall, that forecast going out into the future. We had a sales order that would book with that, maybe that year worth of revenue that we were going to have. And then we would have so we would have that booking initially, but then we would have to, sorry, my son just opened the door, got a little distracted. We wouldn't actually use that to recognize any revenue, and we would just recognize it upon billing. So there was a disconnect between, we said we're gonna book this and what we actually bill. It could be very different based on if someone changed the contract, and it was almost like there was nothing in the future to say that we did anything otherwise. So we would just make the change on the fly. So it really disrupted that flow of, you know, saying what we're going to get and what we actually got. Ideally, they would come in at the same, but not always. Because of ARM, that's really aligned that process where we can't do that anymore. So you have the sales order, and then you have pretty much how it gets billed, and that's going to create your financial transactions with AR, and then you have a revenue arrangement that gets created from those items sold, and through the plans you create what the entries are through deferred revenue. What we were missing was how they actually connect together. So at the end of all of this, at the end of the month, there is a reclassification journal entry. And that was really holding us up because we weren't sure. We were like, we'll just let the revenue go and then the billing go. And we wanted them to really be separate. However, they are tied together based on what the quantity's been billed and what's the revenue's been billed or revenue's been recognized, to create a journal entry that either puts it in an unbilled revenue status or puts it in a recognized revenue status, takes it out of deferred revenue. I went down the road with our group. Do we try to recreate that in NetSuite so we don't have to adjust what we were currently doing? And with a lot of pushback because there was financial, foreign transaction currency issues, things like that, we determined the best thing is to let NetSuite do what NetSuite's supposed to do. So we were able to come to a conclusion, and what we ended up having to do was create, because of this sales order and revenue alignment being attached, in essence linked together, when we had add-ons to our subscriptions, we had to create now 2 invoices for what used to be on the same invoice, and that was a big deal for our company. Because of that, we went to adding a custom record, which created a consolidated invoice view. Took multiple invoices and in essence just made a wrapping around what that subscription was. And so that was, and then using advanced PDFs, we were able to create what looks like an invoice, one invoice for our customer, and be able to send that to them. So that was a big deal for us. But again, allowing the functionality of NetSuite to do what they are supposed to do, and how it was set up. We did look at suite billing. That was another option. I think late in December, you know, do we just scrap this and go to suite billing? And looking into that and talking to some people, it sounds like they have a little bit of the same scenario where, you know, you're crediting out stuff and you're recreating a new contract to be able to give one, or really you end up creating just as many invoices. And I think NetSuite has also come out with a way to create consolidated invoices. Of course, our guys, it wasn't available when we needed it, so our guys were able to put that and make that happen for us sooner. Some of the challenges in reporting that we've found and that we continue to, we found our way around was NetSuite has great canned reports, and the hardest thing I found with their canned reports was when we wanted to add things or we wanted to filter out things. So if we wanted to filter or add extra columns, we weren't getting what we needed, or we weren't able to access what we need. NetSuite, I believe, has brought out workbook analytics, which should help mend that gap. Now I haven't been too comfortable with them yet, and I think that just will evolve with time. But a lot of times I'm trying to take the canned reports and recreate them in Save Searches. And again, that's more, I think, based on familiarity. And also in NetSuite, they do give you a good link to, and this will be in the slides that are provided, to go get what the reports are, what reports they have available, and what's in them and what they mean to the company. All right, so then again, with the implementation, I just wanted to we talked about all the hard things. Definitely the benefits that we saw corrected revenue for TC. Our revenue recognition was always kind of up in the air, and whether it was correct or not correct and what we were doing. So we finally got alignment on that. We pushed our organization to all start using sales orders. So the US was using sales orders, UK UK wasn't, Denmark, we're actually still working on getting them on board, but it did get most of our company to start using sales orders, so that the leadership team and the big guys could see what is our forecasted revenue, what's the waterfall look like, that kind of thing. We were able to align our business with our custom subscription module. We had a third-party contracts and renewal system that we used as well. They were really the same, two modules doing very similar things. Of course, that makes it difficult for our guys to maintain them and support them. So it was nice to move them off of that. Creating one bill for our customer, that was a big deal for us, getting them a consolidated look at their invoice, especially with the new one-to-one relationship that we were seeing because of needing that sales order to show the full life of that sale and the revenue. Again, bridging that gap between subscription revenue and billing revenue, which I talked a lot about on that last slide, and providing the visibility of our forecast and our waterfall in one system. So those were, that was the big plus. And I think that's what our CFO kept saying, like 606 was what drove us, and the ARM implementation drove us to get to the point where, they can fully rely on what's in NetSuite and be able to pull a report and see, what's the next year look like based on what we have guaranteed with sales and subscriptions. So that was a big win for our company. So that was the end of my presentation. So if anyone had any questions or comments.
I unmuted everyone, so now they can ask questions. Does anyone have any questions for Jessica? Okay, usually it's like this, but we can, they can always reach out to me to ask you a question, and we will post the presentation